Welcome, welcome, hello. If you've booked your exam, pop it in the chat. Let me know when you've booked your exam for. That's always good to know. Let me know if you've done MO5 already as well. I recognise some names. I think Rose, you've done MO5 before, haven't you? Thank you for coming back. Morning, Crystal. Nice to see some familiar names from my Facebook group. Welcome. Okay, I'll keep my eye on the waiting room, but let me know in the chat if you've booked your exam. Also, if you've done MO5 before as well, that's always cool to know, because people always ask me, I don't know which one to do first. I don't know if to do M92 or do MO5 first. People don't know which one to do. MO5 with distinction. Wow, that's amazing. Well done. Finding M92 softer. Yeah, definitely. I did M92 first. Georgie's just finished MO5. Excellent. Well done, Georgie. Okay. Excellent, Peter. Coursework's due May. Not booked the exam yet. All right, cool. You're right. The M92 is a little bit softer. Deadline is June, Rosie. Excellent. It is a little bit softer than MO5. And you're also right in saying that it is quite vague. I would be inclined to agree with that. And I think sometimes it does depend on what area of the business you worked in. So when I did M92, I worked in operations, and I think that really helped me because I was sort of the back end of the business, so I wasn't really frontline, so I could see all of this accountant stuff and the corporate governance and the regulations and everything that we had to do in the background to keep the business running, and I think that helped my understanding of it. So I think sometimes it can depend where you are as well. But ultimately, if you've not been to one of these sessions before, there's a lot of stuff to go through in the modules, more than an hour, isn't there? So what we tend to do with these sessions is really focus on maybe the things that you might not have seen before. So I picked out of the book things that you might not have seen, like in IF1 or LM1 or any of the other modules, which are quite specific to this module. Now, this does not replace reading the book by any stretch of the imagination. Definitely have to read the book. However, what it does do is bring out to the forefront of your mind some of those areas that you might not have seen before and that you might not be familiar with. So that's what I've tried to do with this course today, is just to point out those areas, really. We are recording the session that goes on YouTube either later on today or Monday. It'll also be added to our platform as well if any of you are on one of our courses. If you're not on one of our courses, I would be happy to give you a free access to our M92 course for the weekend. All you need to do is put your full name and your email address in the chat box, and I'll set that up for you this afternoon so you can browse all of our content. It's lots of videos, animations, presentations, breaking down every chapter of the book in a lot more detail than I'm going to go through today. If you don't know me, my name's Emma. I work for Empower Development. I'm a trainer here, and we do insurance training across the market. We do lots of CII topics, technical topics, and soft skills as well. So if you've not been to one of my courses before, welcome. Hopefully I'll see you again in some of my other courses. But basically today we're going to look at an overview of the market and the market structure, which you might be familiar with, but we'll sort of just do a recap of that and bring it all back to the forefront of your mind. And then we'll look at the terms used in the structure of the insurance industry. So I've sort of plucked out some things that have not been in previous years' books, because the CII tend to focus on these things. If something's new in a book, you're probably going to see a question on it in your exam. We'll then do some key terms for corporate governance. It's always a section that people quite scared of, but it's in theory quite a straightforward concept. And then we're going to look at some key terms for accountancy. Might not be how you imagined you would be spending your Friday afternoon. However, we do need to know it for the exam, so we will look at those. And we'll finish up on some relevant bodies and associations. So in the later chapters, it's quite heavy on some of the accountancy bodies that you might need to know, and some of the rating agencies as well. If you do have any questions throughout the session, please pop them in the chat. We can go through them. If they're relevant at that time, I'll go through them then, but if not, we can catch up with them at the end. It's typically quite fast paced because you don't have a lot of time. So I'll get stuck right into it. Okay. So first of all, excuse me, we'll look at the different parts and the structure of the market. So on the left side here in the blue, we've got predominantly sort of Lloyd's areas. So remember, just as a reminder, Lloyd's is a marketplace, it's not an insurer, and it is a society of members. And these members form syndicates who employ managing agents to sort of conduct the day-to-day running of the syndicate. And you might recall some of that from any certificate studies that you've done in the past. M92 specifically brings into the equation about the council and the Corporation of Lloyd's, and about the Corporation of Lloyd's being the franchisor and the syndicates being the franchisees. So that's quite new information in this module. Another thing that links to London Market is the P&I clubs, which is the protection and indemnity clubs. So there is a section of the book that talks about these, just to remind you that they're there and they're to do with marine. So you may have already sort of come across this in previous studies. There's a lot of information about brokers and distribution channels, which we'll look at as well today. And they talk about sort of different types of brokers or insurance intermediaries, you might hear it called both. Generally Lloyd's brokers, so people who can broker in Lloyd's, but maybe people that can broker in Lloyd's but don't have a Lloyd's membership, so they've not been authorised to do that. These people would typically need a TOBA, so terms of business agreement. They talk about the middleman and what they actually do in respect of their role. And this middle row looks at companies. Companies in this book are split mainly into proprietary companies or limited liability companies owned by shareholders, and then mutuals as well, mutual companies who are owned by their policyholders. So that's just a bit of a reminder. If it's been a long time since you looked at IF1, just a reminder about those proprietary companies are owned by shareholders and the mutuals are owned by the policyholders. Okay. When we talk about those proprietary companies, we're talking about people, Aviva, RSA, and then the mutuals. NFU mutual is one example, and anyone else who's sort of pooling risk for the benefit of their members. So those policyholders typically they have something in common. We do see a lot of demutualisation in the market, so mutuals becoming proprietary companies as well. So talking about pools, this section is about the state in general. Talks about state provision of insurance, and the two main areas that they look at is flood re, which does what it says on the tin really, provides reinsurance for any flood risks. This is sort of where any traditional insurance isn't sufficient, or you can't get the limits. And then also pool re as well, which is to do with terrorism. So again, it's to do with property insurance when we talk about terrorism, but ultimately those two pools are trying to sort of bridge the gap for anyone who's left sort of uncompensated in those two areas.